Alrighty, morning everyone, and welcome back to another beautiful video on this beautiful channel on another beautiful day. In today's video, I want to talk to you or with you about silver and a little bit more precisely the risk of silver. Some of you might know that silver is perceived as a very risky investment, a very risky commodity on the stock market. I want to talk about that risk today, what I think about the valuation of this risk, the evaluation of this risk, and whether or not I think that it is reasonable and useful to rely on that evaluation. Because, well, some of you might have already guessed it, I don't really think it is very useful. But we're going to talk about everything in regards to that in today's video, and I think it's going to be interesting. So yeah, before we do that, we'll start with the stuff that I brought for you today, and then we'll get right into it. First one is a beautiful Luna 3 coin from the Luna 3 series with the 2022 picture of the tiger. A very beautiful coin in my opinion, very good coin for stacking silver. Not necessarily if you just want to stack pure silver weight, but if you want to stack some stuff that can also go up in value decently just with the collector's value. Another coin that does not fulfill that specification is this one. This is the 1 ounce silver Barbados seahorse or Caribbean seahorse, whatever you want to call it, doesn't really matter. And this is a very beautiful 1 ounce silver coin. The problem with this coin is that, you know, it doesn't come in a capsule. So if it doesn't come in a coin capsule, it will get milk spots at some point, and that makes it pretty much just worth a spot, which is unfortunate, but oh well. Next one is this beautiful Perth Mint coin. This is a 1 ounce Dragon and Phoenix coin, a 2017 coin, really one of my all-time favorite coins. It's really beautifully made, and it even had a misprint where this little, like, you know, this little matte part in there from where the neck of the Phoenix is, that was polished as well. And if you had that coin, that's very, very nice because that's worth almost $200 today. So really cool, at least here. You know, it might be different in the States or in Great Britain. I don't know, honestly, but you know, that's what it's worth here. Because not a lot of these coins were minted in the first place. I think it had a mintage of like 25,000, and you know, most of them were not misprints. So there you go. Next one is just a classic American Eagle, 1 ounce silver eagle. But the 2021 second version, so not the version that everyone wants now, which is, yeah, well, kind of unfortunate. But, you know, this is also going to go up in value reasonably much just because it was the first version of the new Eagle design. And I like that design. So, the risk of silver. Why is silver perceived as a risky metal anyways on the stock market? So, the main reason for that is because risk is pretty much only determined by volatility on the stock market. And, you know, silver is a metal that is traded on the stock market. Not real silver, you know, that just the silver that is written on a piece of paper and may or may not exist somewhere, probably not. So, why is that? Well, because, you know, you can't really evaluate the risk of stocks in any other way, because if you wanted to really evaluate the risk of a stock, you would have to look into the company details, and that is of course private. So you can't do that. You can only look at the volatility and have a look at, you know, how much it goes up and down percentage wise, and then just say, okay, this is very risky because it goes up and down a lot, and this is not very risky because, well, it doesn't. So as silver is a very volatile commodity, which it is, you know, we all know that silver goes up a good chunk and also down a good chunk over a whatever, choose a period of time really, and that makes it a volatile metal. But in my opinion, this evaluation of risk, which would make it a really risky metal because it is very volatile, just doesn't really apply. Why not? Well, when you look at the risk of a company, right? You're looking at the risk of your investment turning to zero, basically, because the company could always, doesn't matter what company you look at, could always go bankrupt. You know, we've had some very big companies go bankrupt in the past that no one would think would ever go bankrupt. So it is very certain that every company can go bankrupt if something happens. So that is a risk, right? And that's why you look at the volatility, okay? How many people buy or sell that thing in a given day? So that is definitely a thing, and you run the risk of losing your capital. You don't with silver. That's the thing. You don't have the risk of losing everything with silver, unless you're buying options on it, which, you know, if you're buying physical silver coins, there is no way you're losing it all. Why? Well, you know, it's pretty obvious whether or not the price of this is still something, I still have this coin in my hand. So it's right here, and it's not going to disappear just by the price going somewhere. It's not going to get lighter just because, or less heavy, one should rather say, just because the price went down, right? And, silver is a very rare metal. We do have a reasonable amount of it, as compared to, for example, gold or even the platinum metals, which, the platinum group metals are extraordinarily rare. Gold is much less rare than the platinum group metals, but it is still a very, very, very rare metal. And so silver. Not as rare, but again, very, very rare. Just to give you an example, in 2021, we produced approximately 31,000 metric tons of silver. Just in comparison to that, we produced about 61 million metric tons of copper. So, that gives you a scale, at least like a bit of a scale. I actually don't know if the 61 million tons of copper were in 2021, but it certainly was over the last couple of years, and that usually doesn't fluctuate a lot. So, that gives you a rough idea of how rare silver really is. And we need silver for a whole bunch of stuff. Some of that stuff might be getting replaced, yes, but that only leaves opportunity for other branches of industries to use silver again. Because we are using basically all of the stuff that we get out of the ground, and then some, because there's also recycling. And so, yeah. So it's fair to say that as long as, our civilization exists, and as long as this planet exists, silver has a value. There's always a use for silver in some shape or form, and there always was, and there always most likely will be. So there's no way it's going to zero. A stock can. So if the stock can, but silver can't, why would you use the same method of determining its risks? Because the one thing has the risk of turning to zero, the other thing doesn't. So I don't get it. It doesn't make any sense in my opinion, and I don't think that anyone should rely on that evaluation of risk in connection to commodities. With stocks, yeah, it makes sense to do that, to look at that, but not with commodities. It really doesn't. If you want to evaluate the risk of something like silver or another commodity, why not look at what it actually does for the world? How is it used? Is that something that might get replaced in the future? Is there something that you think is not going to be something that is going to be used in the future? Right? For example, whatever. What is something that we might not use a lot in the future? I honestly don't know, actually. What would that be? I don't know. Osmium is a good example for that. That was used back in the days, right? For like light bulbs and other kind of stuff like that, electronic uses mainly. Osmium is the rarest metal that we have on the planet. Pretty much, like the rarest metal that actually exists, like just there in the ground and you can pick it out. It's a platinum group metal, extremely hard to distinguish from other platinum group metals because they are all very similar. And that's also the reason why we can't realistically say how much of each and every platinum group metal is actually still in the ground, because they all just look so similar. So you can refine them and you can take them apart, kind of, but it's really hard to tell in the ground which is which. So that's why we don't know how much osmium we still have, but we know that it is extraordinarily rare because, every year there's only about like 8 to 10 tons of it that is actually produced, like out of the ground. 8 to 10 tons. Not 10,000 tons, just 10 tons. It's not a lot. It really isn't. That's about the size of most people's wardrobes, because osmium is also the densest metal that we have laying around on the planet. And that's very interesting. I think it's like 22 or 23 grams per square centimeter. Yeah, cubic centimeter, not square centimeter. Geez, cubic centimeter. So that's very rare stuff. Why am I explaining that to you? Because that is something that completely lost all of its uses, because it is way too rare. And it doesn't matter if it's a good fit maybe for some of its uses. If it's too rare, no industry can work with it, because, how many light bulbs are you realistically going to produce, in a year from a metal that you need for that? That's the whole production that is produced in an entire year is as big as your wardrobe. Like come on, how are we going to work with that? So the only use that it has nowadays is jewelry. And that's why this market of osmium is also completely broken, because we have the normal osmium on the one hand, which is just your reasonably pure stuff like 3/9 osmium or something like that, which you can pick up for pretty much exactly the price of gold. And then you've got your jewelry grade osmium, which is crystalline. And the problem with that stuff is that it costs like $100,000 for a 100-gram disc, which is ridiculous. I mean, you gotta be an idiot to buy that. Like, I've never seen such a waste of money in my life. It's the same metal. It just has like 2 more nines and is a crystal. It doesn't even look like a crystal. It looks like sandpaper. Google it. It looks hideous. I don't know why you would buy that, but it doesn't matter. Just that's an example for a metal market that completely got out of touch with itself. And that is something that you could have predicted if you looked at the actual probability of its risks and not just at its stock price, which didn't exist back then. Just, by the way, osmium doesn't really have a stock market price because, it's so rare, there's no point. But you could have predicted that. You could have seen, okay, it's only used for light bulbs. There's almost nothing of that stuff around, so it can't be used for anything else. That will fall down. So that is something very easy. Look at it, you see, okay, doesn't make any sense, move on. Not the case with silver. So that's pretty much my take on that. So yeah, let me know what you think. Do you think that this evaluation of risk is useful for silver? And if so, why? And yeah, if you've got any more questions maybe about this topic or something else, just write them in the comments below. I'd be happy to answer that as always. And if you want to, you can rate the video with like a thumbs up or a thumbs down. And you can also subscribe to the channel. That would make me very happy. Thank you very much. And until next time.